Good morning. I told a logic yesterday. Maybe you're having a small confusion in that. Let us assume net income of an organization is, let us assume, 10 million. Cash flow from operating activity is 12 million. Okay. How a cash flow will be more than the net income? How a cash flow will be more than the net income? The first option can be accounts receivable, okay, collection would have been more than the sales, or you can say credit sales. For example, we made a credit sales of 55 million, but we are able to collect 57 million. Okay, the credit sales is 55 million and the collections are 57 million. If you look at, sir, how it is possible to collect 57 million? If you look at opening balance of accounts receivable would have been like 14 million. Closing balance would have been 12 million. If you look at opening balance is 14 million, closing balance is only 12 million. So how did you collect this 57 million? We collected the credit sales of 55 million plus opening balance to closing balance, there is a deduction, which means our collections are more than the sales. When collections are more than the sales, definitely net income will be lesser than your cash flow. Otherwise, cash flow will be more than your net income. It is not affecting net income anyway. We are here to tell that when cash flow will be more than your net income, when your credit sales is 55 million and collections are more than the credit sales, which means last year sales also collected in the current year. This is one option possible. Second possible is accounts payable payment. Accounts payable payment would have been lesser than credit purchases. Accounts payable payment would have been lesser than credit purchases. Sir, what is it? Simple. Let us assume we made a credit purchase of, let's assume 27 million and we made a payment of 25 million only, which means if you take the opening balance and closing balance of accounts payable, like if opening balance of accounts payable was like 8 million, closing balance would have increased to 10 million. Closing balance would have increased to 10 million, which means we are yet to pay. When you don't pay also, the cash flow gets stopped. If you don't pay, the cash flow gets stopped. So which means your cash from operation will be more than your net income. Otherwise, as an expense, you would have claimed 25 lakhs. As an expense while calculating net income, you would have claimed the credit purchase of 27 million. But really you made payment only for what? 25 million, which means cash from operation would have been more. So when your cash from operation is more than net income, possibility one is collection is more than the credit sales. Possibility two is what? The payment is less than what? Credit purchases. In IMA, they can test the opposite also. Sometimes they may give you a net income of like 18 million. Cash from operating activity. Cash from operating activity is only 15 million. This is the reverse of the previous one. So net income is more, cash flow is less. When it will be? Number one. Okay, cash flow has not come means account receivable collection would have been lesser than the credit sales. Or you can say closing balance of accounts receivable will be more than opening balance, which means we are yet to collect. More money to be collected. Second possibility is accounts payable payment is more than credit purchases. We have made more payment. When you pay more payment also, your cash flow gets affected. Otherwise, closing balance of accounts payable is less than your opening balance. You made more payment than the purchases. So, based on this, they can frame 4 questions. Suppose if it is about accounts receivable, you choose this option. If it is about accounts payable, you choose this option. Either they can give the like this, or based on opening and balance and closing balance, you can determine is it collected more or not. Simple. If you collect more, your cash from operation will be more than the net income. If you collect less, simple. If you collect less, the cash from operation will be less than your net income. Same way, When you make a lesser payment, cash from operation will be more than net income. When you make higher payments or your closing balance account payable is less than opening balance, means we paid last year's accounts payable plus current year purchase also, means your cash from operation will be lesser than net income. Just note this, one of the application oriented question in cash flow statement. Just note this, then we will proceed to the next concept called, integrated reporting. Your collections are lesser than sales, otherwise your accounts receivables are increasing. When receivables are increasing, you're not able to collect, so our cash flow is less than our net income. Same way, if accounts payable is shrinking, you're making more payment or you're making early payments, so your cash from operation will be lesser than your net income. We will move on to integrated reporting. To make you understand in one line, it is non-financial disclosures. Non-financial disclosures. As the title says, it is integrated reporting. It is only financial. It's not only financial reporting. It is integrated reporting. We integrate the people around us. People around us in the sense, people around our business. Who are the people around our business? Shareholders, customers, employees, okay, investors, potential investors, stock analysts, or stock market as a whole, or government, or bankers, or lenders, or bond holders, debenture holders, like that. We integrate and give the report. Not only that, we are also going to report for environment. We are also going to go for what? Reporting for environment. That is why it is called as non-financial information. It is called as providing a non-financial information. So please mark, integrated reporting means providing a non-financial information along with your financial statements. The non-financial information may be short-term or long-term or medium-term, okay, depending upon type of information. Because if you just look at the financial structure of a company and make decisions, that we may go wrong. For example, sometimes people work with technicals, charts, etc. and all while investing. Okay, sometimes it goes wrong when you don't read the profile of the company and motive of the investor or motive of the person who's running the company. Are they behind business? Are they behind money? If they are behind money, like a rocket, they fly. On a particular day, they fall. So where they don't lose anything, big investors, they don't lose much, but small scale investors lose a lot. So to avoid that, the non-financial information is disclosed. Non-financial information is disclosed. It is called as shared value. It is called as which one? Shared value. Okay. So we can just go through in 1960. Okay. They developed in US, just like a big story they would have been given. So integrate managers, employees, owners, customers, society, etc. and all. You just give the integrated report. It is part of your CSR activity. It is part of your CSR activity. It is otherwise called as sustainable development also. Okay. How to do integrated reporting? How to integrated do the report? How to do integrated reporting? See, stakeholders are many. Stakeholders are many. You have to just explain how the value is added. How the value is added. What do you mean by how the value is added? We take revenue from operations. Revenue from operations. Then eliminate the cost of goods sold. Okay. Then include non-operating incomes also. Like interest income, dividend income, all those things just included. You get, this is how we get the value added. Otherwise, by selling the goods or by rendering services, we get revenue. And this cost of goods sold gives us what? The value that is getting added. How the value is going to be distributed? How the value is going to be distributed? Number one, employees. How much of value is shared with employees? In the form of salary, bonus, incentive and all. Number two, to government. In the form of taxes. In the form of taxes, direct and indirect taxes, how it is shared. Number three, what are the different types of CSR activities which an organization does? Like contribution for public health care, or contribution for certain educational moments and other things, contribution for environmental protection, contribution maybe in cash or non-cash for maintaining a park or maintaining a forest or creating a new forest or going for planting trees or how do you go green, all those things are part of which activities? CSR activities. And number four, how much you are paying to your shareholders, or you can call it as investors. Better to use the word shareholders. Okay, we pay preference shareholders, that is preferred stock, and what? Common stock. We pay the dividend. What is the dividend that is shared with the shareholders? Okay, because they invest money by looking at returns. So how much you are sharing as a wealth to the shareholders? Number five, how much to the lenders? Or you can call it as finance providers in the form of what? Interest. How much you are paying, and of course, how much you are giving to, your own organization, retained for expansion. Retained for expansion. This may be a depreciation. Depreciation is a non-cash expense. It's a kind of a secret reserve that you create for expansion. And how much you create in reserves. A company maintain different types of reserves like workman accident fund, staff welfare fund, or compensation funds. Okay, they maintain different types of reserves for the purpose of expansion. Then undistributed profits, we call it as retained earnings. Retained earnings. So this is a kind of a value added statement which a company is providing across the world. Okay, if you read this statement, you can understand the shared value of an organization, how the value is created and how the value is shared. The value is not only enjoyed by shareholders, the value is enjoyed by what? Employees, government for CSR activities, and providers of finance, and of course, for the future expansion, the company is retaining the money. More than a financial statement, if you look at this report, okay, you will understand, okay, the perspective of a corporate will change. Because when you just give a financial statement, people look at net profit. They see 5 trillion is earned, which means that goes everything to the CEOs, MDs kind of a thing. That's a perception of the general public or investors or general employees view. But when you give this value added in proportions, like 20% is shared with employees, around 30% is shared with government. For CSR activities, we spend around 5%. For stakeholders, we are giving 20% as dividend. For lenders, about 8% of value created is shared, and balance is retained for the purpose of expansion. Like that, when you provide, okay, the people will understand it is not only the shareholders or the MDs or whatever is paid. Okay, maybe you can give an extra disclosure also. It is not a fixed norm. You can give an extra disclosure also. You can add, along with fourth point, you can add one more thing also. It is not a fixed format. You can add one more thing like to the CEOs or managerial remuneration, to the board of directors, to the CEOs, etc. and all, how much you are paying. Let us assume about 10% of the revenue shared with them, kind of a thing. So this will give us a better picture of how the organization moves and how the organization shares value. It will create a good image of the company in the market as a whole. Okay, you will understand, okay, running this company is beneficial to various people. Okay, and what is the advantage of this particular integrated reporting is you can just go through whatever I explained in 2 or 3 minutes. Okay, you can find everything will be there. Okay, risk, performance, and sustainability, all those things will be reported. And if you look at, this is the IR framework. This is the IR framework. Okay, those who are providing financial capital, employees, customers, suppliers, business partners, local communities, NGOs in the form of CSR activities, okay, legislators, regulators, etc. Okay, so this is what we are reporting to the people. This is what we are reporting to the people. Capital doesn't mean only what? Monetary capital. You also include a lot of capital, tangible, intangible capital, natural resources, all those things that you are using. Okay, we call it as manufactured or physical capital that is invested, intellectual capital of the CEOs, employees, etc. Human capital includes all those operational employees, kind of a thing. Social relation capital, simple, a good image in the society. Good image in the society becomes a capital or goodwill for the company. Okay, and when you maintain a good image, automatically the product becomes what? Saleable or marketable, kind of a thing. Certain brands we trust by looking at the good image that they maintain. Then natural capital is nothing but though you are running a software company, clearly you are polluting the environment in the form of dumping the electronic waste, or you use air conditioners which leaves a lot of CFC. A software company may not be polluting, but if you look at prima facie, but if you examine, they are also polluting. And if you look at a manufacturing company dealing with chemicals, they do all types of pollution. Okay, you damage the environment, water or air or the locals you disturb. If a bottling company extracts water in a particular area, that area becomes dry. Okay, if you extract water, so simple, you harm the society. You harm the society by running the business. In what way you are giving back to the society? Okay, so what is a thing that you are giving to the society? Simple, for the health and biodiversity or ecosystem, what you are contributing. We have planted trees, we are maintaining this particular thing, or we are maintaining or creating new ponds, reservoirs, water reservoirs, etc. and all like that. You just report that. So all these type of thing, all the kind of a capital that you use, okay, just give the information to them. What is the first one? The quality of information to be available to the financier. For example, you trust the company and invest money. I should provide a quality information about the finance, the financial results and balance sheet. Clear? And if you look at creating, value over a period of time happens only when you give detailed information. A company which is not disclosing information will not have a trust and confidence with the society. So it will result in integrated thinking and decision making, both for what? Short term, medium term, and what? Long term. Shall I hold the shares of the company for short term, medium term, and long term? Shall I be in employment? Shall I supply material? Or should be allowed to operate the company in this environment? Okay, people, the stakeholders will decide based on your integrated reporting. Okay, so this is what is the integrated reporting creates what? Value also to the organization. So you can just go through all these things in a story form. It will be there in the form of what? Integrated reporting. Okay. So an integrated report should include insights about what? The external environment affecting the organization. Okay. In the integrated report, you should provide information about the legal environment in which you are operating, the social structure in which you are operating, and the environment that in which you are operating, the risk assessment about the environment that you have to provide. Then you should also provide about what is the capital that is used and what is the return that you are providing. All types of capital information you should provide. For example, if you look at the integrated report of Aquafina, the Pepsi, okay, not in India, but in US, if you look at, they will give the integrated report, how much of natural capital is used by them. That means water extracted from the earth, they will give it. This many trillion of water we extract from the earth. In what way they offset? Okay, simple. In the bottle itself, the label itself, they print. And that becomes a kind of a marketing also for them. Like through the water reservoirs, ponds that we maintain, we do rainwater harvesting. The rainwater is not getting wasted into the sea. We put more water into there than that of what we extract. That's what they give. They say that we extract 1 trillion water, but through the water conservation measures, we are able to put into the earth more than 2 trillion liters of water. So we give more benefits on the Mari. They just give the report. Okay, it's a kind of a marketing also. Maybe in India you can see some advertisements. You buy the product, we educate the child. Okay, so 1 rupee you buy Surf Excel or something like that. We contribute for the education, health and welfare of the people. And please remember, in India it becomes a mandatory one. CSR expense is a mandatory one. In US also, 2% of the revenue should be spent by corporates for CSR expenses. So it is a mandatory one, but they just gave it as an advertisement or promotion where, you buy the product, we contribute, and they show that how they contributed. So integrated reporting results in a good marketing also for the products. Okay, so this is what is integrated marketing, integrated reporting. Clear? We got financial capital, manufactured capital, intellectual capital, human capital, social relationship capital, and what? Natural capital. Okay, so this an organization use as an input. We do business activities, which may be manufacturing of goods or rendering of services, etc. We do. This is there in your material. And outputs are nothing but the sales revenues, etc. and all. The outcomes should be for financial providers, ensure that you are paying them interest, dividends, etc. For the manufactured capital, ensure that the plants are replaceable, modernizable, maintain reserves for that. For the intellectual capital providers, ensure that you are giving a fair return for their services. For the human capital, as we were seeing in the statement, right? How much of remuneration or salary that you are doing. Social and relationships. Are you following laws? Are you following ethics? Are you following environmental protection laws or various laws which are there in the soil? For the natural capital, okay, you extract, you use it, what benefit you give for that particular thing, or the measures that is taken for offset. Okay, are you providing healthcare facilities, free medical camps? Okay, so those things are being given. So this is a kind of integrated report. Clear? So integrated report should include all types of capital and the return that is given to them. Giving a report of this kind will enhance value in the organization, as I was telling you. It will create values. It will avoid risk. What is the advantage of integrated reporting? What is the advantage of integrated reporting? Number one, employees will not feel that they are away from the organization. They feel that organization creates wealth. It is not eaten by the capitalist. Okay, it is shared to us. Okay, some value is shared to us, like that they may feel. Okay, so a feeling will be there with employees. Number one, for the people who are providing finance, money, lenders, okay, the company is paying interest and dues on time. And the people who are working as CEOs and CFOs will also feel that, okay, this company contributes for their well-being in the form of salary, incentives, bonus, and other things. Okay, and if you follow laws, if you tell that, for example, in my integrated report, I say that there is no pending case against the company, but the company has pending against cases against government or other bodies, now it will create a value, which means you don't harm anybody, but you are harmed by other people. For that, you are following laws and taking an action. So following legal rules and laws, I mean, all those things, creates a value. Natural capital also. Okay, people object when some companies are started. Okay, but people do not object when companies are not, when companies are started. Some objections are there, some objections are not there for the same kind of business. For example, when you extract natural gas in any country, people object. Why? Because you damage the environment by extracting water, that area will become dry, etc. and all people feel. So creating or removing that fear matters a lot. Don't extract, take a sample and show that it will not get affected, so that the people will have a trust and confidence. That is number one. Number two, and if you look at this natural capital, that is where many organizations succeed and fail. In India, wherever Reliance starts, people object. Wherever Tata starts, people agree with it. What is the reason? Tata goes for integrated reporting. Reliance goes for concealed reporting. Tata gives an open report about, okay, if you look at the financial reports, they are maintaining transparency with their investors, customers, and dealers, sub-dealers, employees, etc. and all. Okay, they are also capitalist, but the way in which you show yourself to the society matters a lot. Where you start a new business, okay, they don't object. For example, recently Tata acquired Air India. People were supporting, not opposing. They thought that Air India will be good. But whereas when other government organizations are sold to, let us assume, Reliance Group or Adani Group, then people object, telling that, okay, they are capitalists, they don't share value. They don't share value only because both are capitalists. Tata or let it be, Reliance Group or Adani Group or Wipro or Infosys, they are capitalist. But the way in which you project to the society matters a lot. Integrated reporting gives a good projection to the society. That is the advantage of integrated reporting. Okay, so there are six capitals. What are the six capitals? Financial capital, manufactured capital, intellectual capital, human capital, social relationship capital, and what? Natural capital. You just show how you are giving how you are providing which one? A fair deal to them. That is what. You give details about external environment and give things about governance. Okay, so governance means legal issues, all those things. What is the model that you believe in business? What are the risks and opportunities which are going to be there in short run, long run, medium run, etc. and all? How the resources are going to be allocated, you just give it in the report. How the performance is, for example, your usage of machinery, usage of intellectual capital, usage of human capital. What is the resources available with the company and what is the resources utilized? Okay, resources should be utilized in an efficient manner without wasting them. Okay, keeping unnecessary mission is a waste of time. Let us take one capital called as this capital, manufactured capital. Okay, you got a lot of plant and machinery, but you use only 60% of the capacity. What about the 40% of the capacity? You are wasting that manufactured capital. Intellectual capital, you hire good people as CEOs, CFOs, but you don't give them a job or you don't allow them to work properly. Okay, so utilization, the performance or efficiency also matters. That should be reported. Reported. Then outlook means in the integrated report, what challenges the organization is going to face in the future. Okay, for example, in Google, there is a reduction of number of employees now. Not only in that, many organizations. Why? Because they express clearly that we are facing certain challenges and uncertainties. Why? Because technology is stagnating. Everybody is using and everybody has an access. There is no growth in the technology, upgradation of technology. The problem is there is an uncertainty. How to overcome the uncertainty? We go for technological change. For example, Google Earth or Google, Maps, everything gets updated, but updation comes with a cost. Server cost will go for the Google from like 1 trillion to 10 trillion. 10 times the server cost they have to incur to upgrade the system, kind of a thing. Okay, for example, in case of Indian Railways, it is one of the largest you can say online bandwidth services where at a time even 10 lakh customers can book. At a time, in a 1 minute, 10 lakh customers can book. 10 lakh customers can book. The server may not hang. They are enhancing the servers to like 20 lakh customers. Okay, at a time, in a minute, if 20 lakh customers book the ticket also, that will not hang. Okay, so those things, but that comes with the cost. Okay, then the basis of presentation should be, okay, both quantified as well as what? Evaluated. Both quantified as well as what? Evaluated. Okay, so all these things you should just go through with respect to what? Integrated reporting. Benefits I told you already. Okay, customers will have a faith on you. Employees will have increased attitude towards the company will be there. And again, society will cooperate with you. Investors will be ready to invest the shares with you. Whenever you make an IPO, they will trust the company and invest. CEOs, CFOs will work for the betterment of the company. Integrated reporting becomes like a teamwork. Team means it's not a small team. Team of the all 6 intellectual capital or all types of capital providers. Okay, so it results in a better communication. But the problem is people are not ready for integrated reporting because they feel that disclosing certain information may result in more competition to the business. Number one. Number two, it will result in unnecessary complication. For example, in integrated report, when I put in my company this much of hazardous has been kept in the water or kept in the air, or this much of water is being polluted or air is being contaminated, then people get information about that. Sometimes they agitate, they retaliate. Sometimes they may go for a strike, sue us. So they are afraid of the legal consequences. And certain managements feel that it is my business, my capital, my investment. Why should I go for? That is one more thing. Then internal control over the non-financial data, okay, will go to the public. That sometimes becomes what? A problematic one for them. Clear? So and sometimes when you give them integrated reports, the problem is analyzing a non-financial data becomes a problematic one for them. Financial data we can analyze easily. Gross profit ratio, net profit ratio, current assets, current liabilities, you can analyze it easily. Non-financial information, it is very difficult to analyze. It is very difficult to interpret, because interpretation changes from time to time, person to person also. So that is the benefit or advantages or disadvantages of integrated reporting. From this, what kind of IMA questions can be tested? We will see. Go through this question. It's only a conceptual question that can be tested. No number game can be tested in this. Which of the following statement regarding natural capital as defined by integrated reporting is true? Read the question. Is it related with sale of goods? Is it talks about only in renewable environmental resources? Okay. Is it only natural resources? No. It includes entire biodiversity and which one? Ecosystem. When an organization begins to design, implement and integrated reporting, the organization will likely to perform all of the following except get record. See, integrated reporting provides financial data or non-financial data. Non-financial data. In this, mandate specific KPI means
Key process indicators.
key process indicators within all segments of the organization, which will be included in integrated report. Okay, so this is to do with financial information like return on investment. This is to do with identifying risk and return, identifying, for example, which division is doing good, which division is doing bad, like that. So that is not part of your integrated report. Taking a financial data is not part of your integrated report. That is an exception. Oh, sure. In terms of integrated reporting, all of the following are providers of financial capital, except stakeholders provide, bondholders provide, assets and fund managers, they provide financial capital, except what? Legislators. It's a very simple question. According to integrated reporting framework, the primary users of integrated reports are which one? Finance providers. The primary users are which one? Primarily, who are interested? The financial providers are interested. Others are also interested, but providers of financial capital are the primary users of integrated reporting. An organization will typically discuss the competitive landscape or marketing position within the constant element. That sentence talks about competitive landscape and market position within the content or element. Is it based on your business model? That is internal. Performance also internal. Governance is to do with legal. So organizational overview and what? External environment. Where my organization is, how the external environment is. Based on that, okay, all these things will be discussed. Where does an organization want to go and how it intend to go there? Simple. Where you want to travel is to do with which one? Strategy of an organization. Okay. Where do you want to travel is more nothing but what? The strategy that you adopt. Okay. And how you are going to go there is based on your resource allocation. Through both strategy and resource allocation, you decide from now where. So that is not a business model. Business model is to do with distribution channels, production and distribution channels, all those things. Governance is to do with legal. Performance is nothing but for evaluation purpose. So strategic and resource allocation leads to where you want to travel and how you want to reach it. Which of the statement is true with respect to integrated report? Integrated reports cover short term, medium term, and what? Long term. That is direct answer actually. And there is no, what is short term, long term, medium term? We cannot decide. Okay. Can you say that 1 month, 5 months, 1 year, like that? No. So, length of the time is not decided. Okay. Whether the integrated report is for 1 year, based on 1 year? No. Is it based on 10 years or more? No. Is it 2 or more years? No. Integrated report will cover what? Everything. Short term, medium term, as well as what? Long term, as decided by the organization. What challenges and uncertainties is the organization likely to encounter in pursuing the strategy? Outlook, risk and uncertainties, strategy and resource allocation, and which one? Business model. Read the question once again. Integrated report, which content element would be used to answer this question? What challenges and uncertainties is the organization likely to encounter in pursuing the strategy? The outlook of the management. Okay. What decides, for example, an organization has a turnover of 1,000 million to cross to by 50%, to increase it by 50% over a period of 3 or 4 years. Okay. What strategy you will follow depends on the management outlook. The management outlook means what the management perceives and what thinks. அது மாதிரி தான் இருக்கும். But that is the first correct answer. In integrated report, information about organization leadership structure should be included in discussion in which of the content element. Leadership structure is to do with which one? Is it related to do with strategy? Is it related to do with business model? Or is it related to do with external environment? No. Okay. It is to do with which one? Governance. Clear? Who are the board of directors? Who are the CEOs? And what is the span of control, span of management? It's to do with what? The governance. Strategy is to do with where do you want to travel. Business model is nothing but the product mix, etc. that you want to offer. Organizational overview and external environment is nothing but what? Your relationship or your model or your thing with external environment. It's to do with governance. Challenges which might deter organization from implementing integrated reporting will include: what makes you to stop from integrated reporting? I was telling you, complexity. Providing an information is complex, and your information providing is having a cost. It will have a litigation risk. It's a direct answer. Because when you give information about your hazardous substances, the harm that you do for the society or the legal violations, etc., then that will result in what? Litigations also. Which of the following presents challenge to the organization looking to adopt integrated reporting? Same question. It will increase the litigation risk. It will indicate what? I mean, increase the litigation risk of the company. Which of the following presents challenges? Same question repeated. This is also repeated question. All these are IMA past questions. In terms of integrated reporting, an organization system for transforming input through the business activities to outcomes, and the aim to fulfill the organization's strategic process, create value for the short term and medium and long term is known as which model? Business model. The model in which you are creating what? Value for short term, medium and long term. That is a business model that you are following. Maybe you can go through that integrated reporting chart itself, you will get an idea. Clear? These are the 6 providers of capital. The business model includes what? Input, business activities and output, and outcomes are provided by evaluating risk and opportunities, performance and what? Outlook. The business model, and of course, it decides what kind of value you create. That is called as which one? Business model. All of them are following integrated reporting, except it's following forward looking into information. 6 capitals are there. It focuses on which one? Value creation. The reporting standards are not determined by anybody. It's a repeated question again. What are the 6 capitals of integrated reporting? Yeah, we know that. Financial, intellectual, human, social relations. It's a direct question. The symbol IR refers to, don't expect these questions, integrated reporting. IR refers to integrated reporting. There is an outlook, there is a performance, there is a sustainability, risk and opportunities, but there is nothing called as sustainability. Read this. Risk and opportunities are there, strategy is there, performance is there, outlook is there. What is not mentioned here? Sustainability is not mentioned. Collaboration between large chemical company and which one? Natural Conservation Society will be an example of DAS under integrated reporting. It is not human capital, natural capital, it's not manufactured capital. It is to do with which one? Society, social and relationship capital. Social and which one? Relationship capital. All of the following the primary purpose of integrated reporting, except they provide value which is created within the organization. Okay, they provide information about 6 capitals. They provide financial, non-financial data. They provide additional audited information to regulators such as SEC. SEC refers to Security Exchange Commission. In India, we use the word stock exchanges. Okay, SEBI. Okay, whether integrated reports are to do with the report to be submitted with stock exchanges? No, no. So this is an exception question, except this one. Integrated reporting is similar to triple bottom reporting. We are yet to discuss this about triple bottom reporting, sustainability reporting. We are yet to discuss this. We'll come back to this question later. Description of organization's input, business activities, outcomes to be included with the content element in an integrated report. We call it as which one? This is what risk and opportunity, strategy, performance, outlook. This is called as which model? Business model. What does this organization do and where are the circumstances under which it operates? What does the organization do means nothing but what do you do. Then where do you operate means the environment in which you are operating. So direct question. It is not about resource allocation. It is not about business model. It is not about outlook. It is about what? Your organizational overview. That is nothing but the positioning. Where the organization do, what the organization do, and which circumstance you operate means what? The external environment in which you are operating. That's it. So now what I request is, I request to read the content, because theoretically what I explain, it will be there in random access memory. Okay, some 6 capitals will be there in your memory. Then some risk, opportunity, outlook, outcomes will be there. That is called as business model will be there. And we have to give non-financial information to the 6 capitals. Like that, it will be there in your mind. It will go to your permanent memory once you read it. So theory, we understand the crux of the topic. It is providing which one? A non-financial information to the people who are investing money. Who are the people who are investing money? That 6 capital providers, they invest money. Then ensure that that information is provided to them. Just read the question, read the context once again. I will share this along with the test so that you can attempt the test. So before taking up the test, read the content once again. Like a novel, you just go through once again. You need not memorize. The main points alone you have to memorize. That 6 capital you should remember. That outlook you should remember. The business model you should remember. The contents of IR you should remember. Then that main key points alone you should remember. Inside the content, don't mug up or whatever. Then take up the test after that.